Hello everyone, I am Fibonacci and this is CryptoEMC Bitcoin Rundown. Subscribe now and stay up to date with this Bitcoin trend analysis under a minute without any BS. So let's start. Today is the 11th of April 2022 and I have a guest who will share his Bitcoin analysis with us today, the chart artist. How are you, my friend? Thank you for
Good in you, buddy.
thank you for being here with us, even with your COVID.
Yes, thanks. I apologize for not being camera ready, but at least I've got a radio voice. Lee, today I want to share with you guys a little bit of history before we dive into why and what to do next. So I apologize if it's going to take a little bit longer than Lee's normal 1 minute, but you've grown to know that I tend to take more than a minute to bring something through. So with that being said, Lee, the
It's all
DXY is
yours.
an important chart. Thanks, buddy. So the DXY is an important chart. Why? Well, simply put, when the DXY tends to trend down strongly, that means that confidence is lost in the dollar and money is finding places to get spent or go and find safety. Historically, it would go to gold, it would go to oil, metals, and any of those type of things. Things that where there's a scarcity level of it. And recently, what we found when we look at Bitcoin, and it's still in its infancy, every time the money there's a run away from the dollar, the DXY would trend down, and that normally signals or creates a bull market for Bitcoin. So we had the 2013 run, and you can see Bitcoin's still very small, so you didn't need to have a lot to actually have a big Bitcoin run. Then the 2017 Bitcoin run, we could see the start was there and all the way down. As soon as that DXY starts turning around, that's around about the time when people take profit on their Bitcoin. And we had the same for the COVID run, the one in March. You okay there, buddy?
I'm good. Something falls out of my desk. Sorry.
Not a problem. So with that being said, so now the idea is if the DXY trends down, it's good for Bitcoin. So if we look at the DXY in an even bigger picture, it's really good for Bitcoin because it's showing us big picture that we're making lower highs and lower lows. So the dollar confidence is going away over a period of time now. So the big trend is even negative. So this is good. So the fact that we're moving up to the upper end of this range means that if we can get a big reversal, now we do not decide how the market moves, we merely trade it. If we get a big reversal and the DXY starts doing this, what does that mean for Bitcoin? What if we get a DXY that does something like it did over here in the 2000 bubble? And we're sitting with Bitcoin, what can that not do for the Bitcoin? So it immediately should give you a big picture possibility. We're sitting at a critical area, so definitely it's an uncomfortable buy, but that's what we want. DXY going into our high point, getting an uncomfortable buy. So with that being said, let's move to Bitcoin and let's just dive into Bitcoin itself, because we know that there's these emotional market cycles. We go through them every time. And the funny thing is you can always identify them after the fact, but while you're in it, it's quite hard to try and figure out where you are. So what I've done is I've mapped them out. And what I've used is this chart, and I've laid out the halvings, the previous all-time highs. These are these orange lines. You can see them all labeled in there, just to give me a little bit of a structure to try and see how these sequence of events plays out. Because remember, the market never repeats, it always rhymes. So we've got a rhythm here, and this is the rhythm that I want to share with you guys. So when we go through a halving, normally what we do have is we've got this big price discovery impulse. So basically it takes you past the previous all-time high after the halving, and then we create a high, and then we come back and test and consolidate for a while. Now that normally sits above the 1618 fib extension. So it's just a normal fib extension taken from the top to the bottom, and we sit there on top of it and we test that range, and then we go on and complete the emotional market cycle and create the next all-time high. So this was what happened in 2012, 2013, and the same happened in 2017, 2016, 2017 run. When we cross this, when you create this discovery impulse and we cross the 1618 fib extension, normally then we go and we complete the emotional market cycle, which means we turn optimism into belief, into thrill, and then into euphoria. Euphoria, everybody forgets to take profit. And normally that's when people then get wrecked properly, proper wrecked. Okay, so with that being said, if we look at this now, and we've looked at this optimism, I actually highlighted this range because if we start moving in today's Bitcoin price action next to what happened in the previous halving, what did we have? We've got the halving in 2016 back in the past, and we had a halving in May 2020. So what have we done is after the halving, we created the price discovery impulse and we stayed above the 1618. And currently we've done just that. We created the halving, we created the price discovery impulse, and we got above the 1618 FIB extension and we've stayed above it. So invalidation level for this whole bullish theory is going to be sitting at around 30,170, thereabout. Depends on which exchanges. And now, normally this is then where I go to Lee and ask Lee, buddy, your support and resistance level indicator that you've got. Do you have a target for us there? And see if there's any confluence behind that as well.
Yeah, that is really, really low. And let me check. There's line everywhere. But around this 30,000, yeah, there's one at 31,000, and there's another one at 30,143, which I put an alert already, and that will be the last chance for the bulls to defend that line. So that will be the last buying Bitcoin chance. And there's also like buy and sell range that will be the last buy range on a daily chart. So I'm pretty confident that there will be confluence and there will be reaction within that zone for sure.
Okay, great. So with that being said, I mean, we're going to dive into that a little bit more. I think we need to dissect that again.
But we are far from the 30,000.
That's it. So please don't get scared. And it's not in the sense of we know what's going to happen next, but historically there's going to be a lot of things that need to happen for us to just literally get dropped down to that price point. So with that being said, what we do have at the moment is currently today is we've created all the sequence of events that lined up with all the historical runs that we've had. Okay, we've got the DXY pointing to possibility of going down, which is going to take away confidence stored in the dollar, which is going to have dollars flee to something. What's the best inflation hedge out there? At this stage, it's Bitcoin. So that's all really good fundamental things that lines up with the technicals. And this is where we do well. You know, we look at the fundamentals, we look at the technicals, and then we look at timing. And timing is key. So the entries that we're looking for is so that we can capitalize on this. So that being said, at this stage, we haven't had any thrill, we haven't had any belief or any euphoria waves, and that's why we still have these upside targets to the upside. And Lee, I think you made a claim a while back. What was your ultimate target for Bitcoin?
200,000.
Crazy. It seems crazy, but if you think about it, if you look at it on this scale, 200,000 is on this scale of where we are in relation with accumulation, effort versus result. That looks right there. And that's normally the word. It's a Wyckoff law, effort versus result. Okay, so with that being said, we're bullish on this basis that we're staying above this level.
1618 has been kind of tested already, so it doesn't mean that we have to come back again.
That's it. Definitely, that's true. And this actually where this chart comes in, our point and figure system, because basically it shows us where there's gaps, where there's a reason for the price to go back. And for those that have been following us for a while, you've now seen how powerful this point and figure is in just identifying whether we are done correcting or done trading within a range and ready to leave and so forth. And at this stage, we do have two targets. Now, this is an old target, and this one I'm worried about, and we can discuss this a little bit later now. But I just want to point out to our immediate targets. These are imbalance targets that we shared with you guys when they were created in the beginning of middle of March, 25th of March already. And prices moving back down to those imbalances. And so we're getting to a point where if we start breaking the supply trend that we've got drawn over here, we can easily start looking for our next demand wave for the continuation to the upper imbalance that's sitting at around the 55 level. But now there's a warning sign here, Lee. You said something to me about what if Bitcoin goes to 35K? So, and this means falls through this lower imbalance. What's going to happen then, buddy?
Well, that imbalance, I'm really not happy with that because I've seen a little bit of stats on the liquidation levels, the liquidity hunts, and as far as we can see today, there are a lot of liquidation around 35k and not 36 or 37. So if we drop to that imbalance and the liquidation level, the bigger liquidation level is sitting at 35, I would imagine that we will lose that imbalance area here.
Yes, so that would be some scariness, and that's kind of that brings the idea. I would not want to see us retrace, because
No,
if we go to there, what are we doing? We're making a lower low.
yeah.
So for me, the betting man, the trading man, would not be putting my hopes on this level anymore because it would be bad. I would rather then wait for the confirmation. So it points to us, so these are the obvious targets that we have to pound. So our next obvious target would be between 41, we can actually narrow it down. There's the bottom of it, 41,800, and 41, we can actually go as low as 41,300. So do your your support and your resistance levels, do you have a level that correlates with that? I'm bringing up your chart.
Yes. So that is the imbalance area that you see on your chart. So I've got
Yeah.
31,379 on Binance, one of the support line, which is important for me to that we hold this one. I will allow it a little bit maybe to go down even at 40,000, but I would definitely not want to see anything below 40,000 to maintain this bullish momentum.
Interesting thing you're saying. When you say you don't want it to lose it, but it can go down past it, it means that you don't want to see candles close below it. Am I correct?
Or even wicking a candle that wicks down under 40k, it will ring my first alert, my first alarm that says maybe this is a really a bearish trend, and we start to reverse the trend. For now, on the weekly structure, I consider maybe this one at 40,470 as as a bullish structure. So I don't want to see anything below 40. If you want to push it a little bit, maybe you can call this one at 38. But I would really love to see this 40,000 actually holding the price,
Yeah. So
because there's a daily demand zone here between 41 and 40,496. So if that it's a daily chart, daily demand zone, it should be strong enough to put some reaction up.
well, that's an interesting thing. If you look at demand zones and what makes a strong demand zone versus just a normal demand zone. So well, normally what happens is when you've got a strong demand zone, it means that when price leaves that area, it creates a big price wave. So that net points to a strong demand zone. Now, this would be a strong one because once price left this range, look at what it did. It nearly went to $50,000. So a test on this would mean that there's still a lot of reason for this area to get defended, and that's why this is a high probability setup for us. As well as if we look at this from the low to the high, it's sitting around the 161, the 618 golden retracement level. So
Exactly.
that's a really
So
good.
the last bullish structure that we have from 37,555 to 48, if you put that fib from this 37.5 to the top here at 48, we will be dropping exactly below between the 618 and 786, which is 41,617, and 786 will be at 79,830. So within that range, that will be a nice, actually on the daily chart, it will be a nice accumulation zone here.
And this is not catch a falling knife buying. So the idea is you're buying now the confirmation, because where would your stop be? Your stop would literally be below the demand zone because you wouldn't want to lose it. Even if it wicks through it and you get into profit again, you get out, because purely when you lose that demand, it means that there's no more people buying the wave behind you. Remember, if you want to make money, you're buying early. The goal is to buy early so that everybody that's late to the party has to buy from you. That's how you realize your gains. And if there's no wave of people waiting to buy, what's the point of holding it? Because you, in the end of the day, might just be the one selling at a loss to purely get out of your position. So that's the nice thing about this area. We can have a realistic light stop. For me, my stop would be, because I don't want to get quicked out due to some stupid volatile price action. But I wouldn't want to go 40,000. I can have my stop hidden around that level, and I will be happy with that. I can buy that any day of the week. If I get stopped out, I'm fine with it. So Lee,
Yeah.
with
Do you
that
have anything
said,
else to share with us?
yeah, I want to quickly share this with you guys as well. Just something that we did last week. I showed you guys how the total market cap, everything is in harmony now. The total two Bitcoin, everything made a higher high. So we're good in that set. What do I mean by that? Well, we changed the character of the market. We were trending down. We've now changed that. We've made a higher high, so we need to come make a higher low. So this is the retrace we've been waiting for, and we've been sharing with everybody for a while. So the areas where we'd want to see this retrace take place for the total would be at around $1.8 trillion. So we are moving back down to that level, which is really good. And the same then for the total two, the alts, just the major cap alts. That area is sitting at about $1 trillion. So we're sitting in a position where I still see the alts going to get punished a little bit more, while Bitcoin needs to find its floor. We've now given you those targets. So the alts will most probably take the punishment, but they were the ones that made the most gains. And with that said, now, when we look at the USDT dominance, I need you to think in the same way that we thought about the DXY. Remember, when the DXY goes down, money wants to leave the dollar because everything else looks better. So the same is the US dollar tether dominance as well. If it goes down, it means people not interested in holding tether. They're interested in being in coins. And when it goes up, people are interested in being in tether. They want to be safe. And at this stage, if you look at the structure, what have we done? We failed to make a higher high, and we've now made a lower low as well. So for me, that is a bearish pattern forming, a bearish structure forming. Area of invalidation, area where I would want to reassess and try and continue for the continuation of the trend would be around this range over here. So when we look at the tether dominance, around 4.6% is going to be the area where I would imagine this runs out. People stop fleeing back to tether and start buying alts, or the smart money keeps on buying alts. Anything you want to add on to that, Lee?
No. Perfect. Thank you
Right,
for being with us, Rudo.
It's a pleasure, buddy. I'm going to remove my screen. Yeah.
Thank you
Anything
for
else?
this Bitcoin rundown, a little bit longer than usual. And
Thanks, man.
get well very soon, my friend.
I will. Thanks a lot for having me, and cheers, everybody.
So this was your, not 1 minute, a little bit longer Bitcoin rundown. Liked what you saw? Let me know in the comment below. As usual, hit the like, subscribe, and the bell button to support the channel and keep hustling. See you for another rundown tomorrow.